So guys, I like to take a lot of time and have you guys learn. So do me a favor right now, if you don't have it, get some notepads and a pen or a pencil. A pen if you're feeling very confident, because I've been known to fill up at least 3 or 4 sheets of 8 by 11, 8.5 by 11 paper. So you'll want to take some notes as you go along, because I'm going to teach you some stuff. Okay, so the presentation I'm giving today is called Discover the Exact 4 Strategies for Making Serious Investment Income That's going to Turn You into a Trading Pro. Of course, I'd like to start off by just saying, hey, any information, charts, or examples that I've given this presentation are for illustration and educational purposes only, not to be considered any advice or endorsement to purchase or sell anything. We do not and cannot give any sort of financial advice. In fact, no employees or persons associated with us are registered or authorized to give financial advice. We do not trade on anyone's behalf. We do not recommend or receive any payments from any broker. Whew. Just want to make sure no black helicopters are landing on my front lawn today. I would share my webcam, except for I just came back from a short 15-mile bike ride, and you probably don't want to see me. I'm all covered in sweat. So let's go ahead and get started. First of all, there are a couple of facts that we all have to come into agreement on, or understanding about, I guess you would say, and that is there's a lot of uncertainty right now with what's happening in the world right now, especially with our Fed having just purchased here in the States something like, we're up to about 8 trillion of IOUs to the Fed. That's why our cryptocurrencies and our gold is shooting through the roof. I mean, we don't know what this quantitative easing, we used it back in 2008 and we haven't stopped using it since. So that's kind of creating a whole bunch of wrenches in the works. We've also got to know that what's happening in the markets, though, if played right, can set you up for months, if not years to come. And you have to come to this understanding that when that money is not created or destroyed, despite what they say on the news headlines, where they say, oh my gosh, you know, investors lost this much money. No, they didn't lose it. It's the markets, you can't lose money. It simply goes from one person's hand to another. The key is putting yourself on the right side of that transaction. And we've been right. I've been teaching this premium selling program that I'm going to talk to you about on how to do premium selling since 2007. Trading Trainer started in 2003, right? So I've been in business now teaching this stuff for 18 years. And the scoop of the matter is we've been successful through the 2008 downturn, through the pandemic, and I'll show you some examples of some of the stuff that we've been doing. Before I like to get started, I always like to run this little example. Now, you've probably seen this a million times, but just humor me here. Which would you take? 50,000 today or a penny that doubles every day for a month? So let's go through the math. So far, if I go a week into the month, that's already, right? That's already a fourth of the way. If you think a month is about 4 weeks, a fourth of the way, I've only got 64 cents to my name. And I've had to put in a lot of work. Don't forget, I could have taken $50,000 and run, but now I'm having to spend that month doubling that money. So that takes some effort. And I want you to understand the metaphor here. So I'm about a third of the way through the month. I'm nowhere near $50,000. Now I'm about halfway through the month. I've got $163.84, still nowhere near $50,000. I've been working half the months, probably questioning, what the heck have I been doing? Why didn't I just take the $50,000 and run? Because if there's only a month, I'm already halfway through and I'm nowhere near there. Now I'm about 3 weeks into the month. I mean, I'm making some money, but I could have, you know, I've been working every day, doubling my money, and I'm only up to $10,485.76. But look at what happens around day 24 of the month. I'm almost done with the month. I've got pretty much just 1 week left, and I finally passed $50,000. And then on the back end of that month, the last week, I mean, things just go amazing, to the point where if I had taken the penny, I would walk away with $21,474,836.48. Now, I'm not sure if Albert Einstein actually said this, but he's always attributed with it that compound interest is the most powerful force in the universe. But realize that that didn't come. And a lot of people who need instant gratification, and I sometimes have to look in the mirror because that sometimes is me, don't want to do the work in order to get that last push that's going to push me over the end. I want instant results. And now I want you to take a look at this graph. I'm going to bring this graph back towards the end of the presentation, but I want you to understand, I want you to notice that this is not a linear graph. This is a horizontal, exponential graph. And in addition to that, I want you to notice that there's a range low and a range high. And notice that the range low, this is a zero line right here. Let me just put the number 0 because it's not written. This is the 0 line right here. This is -20 and this is 30. This is the 0 line right here, and this line crosses that 0 line right between the 1 and the 2. I want to talk about that as we go forward, but I wanted to kind of tattoo that into your mind right from the get-go. Okay. So if you reverse engineer, because I know doubling your money every day is, that might happen once or twice in an investor's lifetime, but that's not something that we can count on, no matter how many times people jump up and down, trying to sell their products to you. That's not going to happen very often. But what if we reverse engineer it, right? Because right now, if you put your money into a money market or even a mutual fund, you'll be lucky if you pull out 5, 6, 7% a year. What if we wanted to double our portfolio every year? What would we need to earn? Well, reverse engineering it, we'd have to earn 6% on our money every month if we wanted to double our portfolio every year. So let me ask this quiz question of you right now, just to make sure you're paying attention. Go ahead and write the answer down on your piece of paper. What minimum returns must we make monthly on our portfolio to more than double our money annually? Is it 0.5%, 1.5%, 5%, 6%, 10%? Now, if you said 6%, then good, you're paying attention. 6% is that magic number that my investors try to target every month, right? Because my investors are trying to double their money annually. Now, I'll tell you, since the beginning of this year, we've been making double digits in my program, which means we're on target to be doubling our portfolio in about 5 months. However, our target, our goal is 6% a month, because our goal is to at least double it once a year. If we double it every 5 months, that's great, right? Something to take in mind is if you're focusing on 6% and you put in $1,000, you'll have $2,012 in 12 months if you just focus on that 6% per month. Or $4,048 in 2 years. Or if you put $1,000 in 5 years, you'd have close to $33,000. And in 10 years, well, you'd be a bona fide millionaire. But that's not even as exciting as if you had $100,000, if you grow your portfolio to $100,000, then every year you're going to generate $101,219.65 per year. Now, I don't know about you, but that's a nice living wage, right? In fact, that's higher than the mean white-collar labor job here in the States. That's $87,000. And the good part is it's your $100,000 portfolio working for you. It's not you putting in a 60-hour-a-week job. My guys don't like to day trade. So I know that some of you are out there who do want to day trade. Maybe this would be an opportunity for you to put some of that extra money you have just sitting to one side in cash to have it work on the side. So what are we actually investing in? Well, we're selling theta decay optimized option premium. In other words, we profit as time goes by. A lot of people say, aren't options risky? Well, the beautiful thing about options, and I've been trading equity options since 1997. I'm coming up on my 25-year anniversary of being an options trader. Not only do options make money when they go up or down, like when, with a stock or a commodity or even Forex, you can make money when the market goes up or down simply by going long or short, but you can make money when the market goes sideways with options. You can make money as time passes by with options. In fact, you can make money on fear and confidence in the markets with options, right? With stocks, commodities, futures, crypto, you only make money directionally. There's only two ways to make money: go long, go short. But with options, there's 27 different ways to apply options on every single pattern you can imagine. And there's also the course of leverage. Options give you a whole bunch of leverage on the underlying symbol. So good. A lot of people are still saying, well, I still don't even understand what this option is. Well, it's a financial instrument called a derivative. They're bought and sold to hedge risk against stocks, indexes, and ETFs. But again, that's not how we're actually using them when I do them. I'm selling their premium to generate income, almost as a passive investment. Not quite, but almost. I do maybe 3 transactions per position per month. Quick question. I just want to know, how many of you have actually been following me? I'm AJ Brown and my content for a while, versus how many of you have heard of me before but not sure when and where, and how many of you have no idea who I am? I just want to get a quick idea. That's interesting. Good. I'm glad that nobody's heard of me. It's funny because I've been around since 2003 doing this. So let's just take a quick second. I founded this company, Trading Trainer. People call me the world's most disciplined options trader. I actually think behind my back, they call me the world's laziest option trader because I like to take the least amount of effort, least amount of investment dollars to get the most return. I like to think of myself as the world's most efficient option trader. I've been doing this since 1997. As the opening said, I've been publishing my daily insights for my Trading Trainer participants every night, 5 days a week since 2002. A lot of the successful option traders out there, you'll find an ebook on their computer called The 7 Strategies of Successful Option Traders. I wrote back in 2005. A lot of people have this home study course on their shelf. Big thing is I'm a learner, right? I got a degree in mechanical engineering. I have a focus on automatic controls, the marrying of electrical and mechanical engineering, and I've got a strong background in commercial business investing, but the big claim to fame is what I started to do in my 30s. I'm in my late 40s now, but in my 30s, I really started to learn how to teach. I'm a practitioner of what's called accelerated learning methods and techniques. A lot of folks don't know how to teach. A lot of people who have been previous floor traders like I have not been able to actually convey what they know to others. They're like, just watch me, you'll figure it out. But I've been taking a lot of time to figure out how to actually teach things so that I can convey a lot of information to you quickly. And that's what I'm pretty proud of. And just understand that when I started in 1997, I lost big. Not only did I spend $27,000 on seminars that first year, and just to understand, back in 1997, there wasn't many webinars. I think one person was using WebEx back then, but most of us had to go to like these weekend seminars in a hotel where you'd go for half a day on Saturday, and then they'd make you come back after paying a whole chunk of money for all day Sunday, and then maybe you'd find yourself paying another chunk of money. Some of you might identify with that. I did that for quite a few years. In fact, I'm still signing up for a whole bunch of people's programs every year. But I spent $27,000, and then on top of that, I gave $85,000 back to the market while making stupid investments those first few years, trying to follow those programs. And I actually found out very quickly whose programs were real and whose programs were just full of, they were selling more. They were doing better business selling us, bogus programs than they were actually, making money on investments. And so I've kind of been in that same place as some of you have. And what I learned is these 4 shortcuts on how to be a successful investor. Number 1, you want to stop chasing shiny objects. I mean, these folks who will come and talk to you will tell you all about these shiny objects and how they're going to double your money overnight. And all you have to do is settle on one type of investing and learn it really well. whether it's crypto, whether it's what I do, equities and options, whether it's just trading straight out ETFs or stocks, pick something and get really good at it. Number two, hire a mentor who's currently doing what you want to do, not somebody who's done it in the past and knows how to teach, right? There's this thing called guided discovery, and it's where you walk in somebody else's footstep, and it's way easier to learn than doing something by trial error, right? Last one is I want you to join an investment group or create an investment group, even in your household or with your cousins, or just join a group, because that way you can look over each other's shoulders, and you might find out that one person is good at one aspect of investing or trading and another person is another, and you do something that we've been taught in grade school and high school never to do, which is look over each other's shoulders. You do want to do that in the real world. It's called leveraging with pride. Get rid of that word cheating. It's okay to not be a cowboy. In fact, if you ask any successful option trader out there, you'll find out that they're connected with a whole bunch of other people and they leverage with pride. If somebody else has a good trade, they do it too. They don't say, oh, well, that's your trade and I don't want to copy. Forget that. That's not the real world. So make sure you join an investment group, leverage with pride, but also contribute to that group. Don't be an energy sucker. Last but not least, surround yourself with like-minded investors. If you surround yourself with naysayers that are always trying to convince you they're wrong, well, you'll soon believe that. Okay, this is exactly what I did in 1999, 2 years after I started this, and all of a sudden I became very, very successful, to the point where in 2003, not only did I start Trading Trainer, I also started a foundation where I have taken historically underserved inner city kids off the street and I teach them how to invest. That first year in 2003, I took 9 kids out of a pretty rough section of Denver, and I spent 6 months with them. The cool part about it, and I'll get back to the training in one quick second, but the cool part is we had to go to a library. Back then, only a few people had high-speed internet. It was called DSL back then, and these kids definitely didn't. So we went to the library. The library would cut us off. There were so many people waiting in line for the computers connected to the internet. They would cut us off after an hour. So I only have an hour a day with these kids. I spent 6 months with them, and then I actually, you might write the word sucker on my forehead, I gave each one of them 2,000 of my own dollars. And I said, I'm going to have to just write off this $18,000. I'll never see it again. I'll tell you that every single one of those kids paid me back the $2,000. And in addition, one of them is actually at DU now. This is 2003, so it's 18 years ago. One of them is at DU now teaching finance, right? A lot of them were able to buy their own computers. One of them paid for his way through college. I mean, these kids were just mind-blowing in what they picked up. So if I could teach these underserved kids this, I could teach anybody, right? At least that's the theory. Okay, let's get back to the topic at hand. How do we sell premium? I want you to focus on 4 simple transactions. Covered calls, a lot of people have heard of them. Covered puts, this is where you flip the covered call upside down. You profit when the underlying symbol is starting at the top and going down. Writing covered calls against leaps, this is where we supercharge our covered call writing. If you're an academic, this is called a bull call diagonal debit spread, a variation, I should say, or a subset. Writing covered puts against leap is the other strategy I'd like you to become familiar. This is bear put diagonal debit spread. By the way, I forgot to say something about that charity. It still runs today. We have since moved it from Denver to Chicago. I have partnered with the CBOE. Last year, we had to take a break because of the pandemic, but the year before, we graduated over 180 South Side Chicago kids through my program. So I'm very proud of that program. It's why I do everything, right? Because that's my legacy. That's what I'm going to be leaving behind, is that foundation. So here's something I want you to know about these 4 trades. Number 1 is that the writing covered calls against leaps, and writing covered puts against leaps are all cash trades. When you see the word cash trade, I want you to know that that can be done in your Roths, in your IRAs, pretty much in any one of your investment incomes, any kind of cash account, you can do that type of trade. This guy over here, writing covered puts, because you have to short an underlying symbol to get started with that trade, it does require a margin account. So I want to put that out there. Now do realize, and let me see if I can get my pen out again. Yep. Do realize that these two are related and these two are related. So you can take advantage of the patterns that work with the covered put simply by doing a covered put against a leap. So not only do you get the leverage, which is always fun, but you get the ability to convert a margin trade into a cash trade. Now, some of you are saying, okay, you keep mentioning this word option premium. What the heck are you talking about? Well, whenever you look up an option price on the CBOE board, or now options are traded on the NASDAQ and on other exchanges, whenever you look up the price, I want you to understand that there's two components in that price. The option price is always equal to the in-the-money value. Now, again, if you're an academic, you'll say, well, isn't that the intrinsic value? You're absolutely right. And the premium value, otherwise known as the extrinsic value. So those two components, whenever you see an option price, just realize there's two pieces to it, the in-the-money value and the premium value. So let me give you an example. This is actually taken from yesterday's close. If you wanted to, you could take this trade Monday morning. GE closed at $13.39. Now, if I immediately bought some GE stock and then sold back the call, I'd create for myself basically an expiring coupon, right? An instant dividend, a profit buffer. Well, let's just go through the math. I'd get that instant dividend, and it would be $39 per option contract sold. Now, if some of you aren't familiar with options, they're sold in lots of 100 unless there's a very special case. And so you do this in lots of 100, you'd spend $1,339 and then immediately get $39 back, right? For every contract you do, an instant dividend, a payback. So then you let it go on through May 21st. Just let it sit there. If GE closes above $14 on May 21st, you paid $13.39. You'd get $14 back, so you immediately get 61 cents per share profit. And in addition, you get to keep the 39 cents you made in the beginning. So you make $1 profit, which actually works out to a 7.7% ROI. Not bad, right? Now, what happens if GE doesn't move at all? It goes flat, it goes sideways. That's okay. You got $13.39. You made 39 cents. So you reduced your cost basis and instantly down to $13. And you do it again and again and again, right? You made 3% and you just keep selling premium on it. It's like having a rental property and just collecting the rents anymore. But instead of worrying about trash tenants and toilets, these stocks don't get abused. What if GE drops? That's what everybody worries about on a covered call. What if it drops? Well, one of the cool things, and I'm going to tell you a little bit later in the presentation, and I apologize for talking fast, but I've got a lot of material. If GE drops by May 21st, I'm going to tell you a little bit later how to even just completely stop the risk at all. But even built into just the covered call writing strategy, because we collected that 39 cents and reduced our cost basis, we instantly had a profit buffer. It can drop by as much as 39 cents and we're still going to wind up doing well on the trade, right? Because we have a $13 break-even price. Okay, let's take a break and make sure you're paying attention. Answer all that applies. What does investing by selling premium create? Does it create an instant dividend, a discount on buying stocks or ETFs or indexes, a profit buffer, or an expiring coupon? And it's all that applies. So what do you think? Is it A and B, A and C? What do you think? A lot of people are typing in all. You're absolutely correct. It's all of the above. Here are some gains that we've made just recently, 17% on Micron and 12 trading days. This was when the stock traded up. We made 15% on Activision in 34 trading days. That was when the stock treaded water. 14% on Allscripts Healthcare. This was 86 trading days. This was when the stock took a big dookie. Okay, now I'm going to ask you a question. We're going to get harder and harder throughout the hour here. How can we lower our investment, increase our returns, and even create a margin trade into a cash trade? Oops. Should we sell out in time options? Should we replace the security with options trading at parity? Should we give up and buy mutual funds, or is what I'm talking about not even possible? What do you think, A, B, C, or D? While you're answering that, I want to show you an actual trade. So the GE was an example, but here's a trade we just did on Ford. I keep all my trades logged in this spreadsheet here. We bought some Ford stock for $11.12 with commissions. It came to $11.13. We immediately got a credit of 35 cents, dropping our cost basis to $10.79. When we got exercised at the $11.50 strike price. We wound up walking away very easily from February 3rd to February 19th with a 6.5% ROI. Not bad, right? All right. One thing we don't want to do is sell out in time options. Why? Because of the way that the option decay curve goes. In other words, if you sell an out in time option, it's not worth the amount of time we're in it where something can go awry. Doesn't make it worth it for us as far as the return that we're get. The real return comes when the option's near term. So it turns out the answer we're looking for is to replace the security with an option trading at parity. So what do you mean by an option trading at parity? Option premium, as you know, we've been selling near-term at-the-money options calls. When you looked at the example, option premium is the most when the option is at the money. So when we're selling premium, we want to do near-term and at the money. But when we go deep enough in the money, the option actually has very little premium. In fact, we like to target having less than 5% extrinsic value and is almost completely all in the money or intrinsic value. In other words, we go deep in the money and it behaves exactly like the underlying symbol, dollar for dollar, only at a cheaper price. So then you might say, well, how far out in time should our options expire? Somebody wrote in the chat box, high delta. You're absolutely right. We buy our back month options far out in time so that the substitute option expiration will not interfere with selling many cycles. So it's not about theta decay or having the option decay because it's so deep in the money that its value doesn't decay. Intrinsic value doesn't decay with time. What we don't want to have is have, like, for instance, this cool rental property set up where we're collecting rents every month, and then all of a sudden the property dissolves and we can't collect the rents anymore. So we want to go out far enough. And on average, our folks in our program are holding positions 5 months. Now, some people are holding positions as long as 7 or 8 months, and some people's positions wind up getting exercised in 2 or 3 months, but the average number is 5 months. That's where the bell curve of. So with that said, how far out in time should you actually go? I want to give you actual numbers. Because our outlier is around 8 months, and there have been some that I've had. In fact, I've got one right now that's stretching to 12 months. And I've had one in the past, only one or two, actually two since I started doing this 25, that went 14 months, but those are all outliers. 8 months is at least how long we want to go out. So please write that down in your notes. And let me see if I can get rid of this, all my chicken scratch so you can read that. So we typically use option leaps. So we go at least 8 months out in time, but we like to use the leaps because of liquidity. Leaps have a lot of liquidity versus, for instance, if I went 8 months out and that came to, say, the November option, the November option might not be as liquid. So you can go greater than 8 months and just go to the next leap. So find a substitute that trades at parity. Here's our GE option again, 1339, or we could use the GE January 2022 leap at $7 strike price and only pay $6.48. In this case, this intrinsic value is 98.5%, and only 1.5% of this option is that premium value. So let's run through the same example. So instead of paying the $13.39, I'm only going to pay $6.48. I'm still going to collect 39 cents up front, get my instant dividend, get my discount on that back month option, create that expiring coupon. What if GE closes above $14? Well, I paid $6.48. I get to keep the difference between $14 and $7 calls, so I get to keep the $7. I make 52 cents of profit. I get to keep the 39 cents. That's 91 cents of total profit on an initial cost basis of only $6.48 minus the 39 cent discount. That's a 14.9% ROI. Now, what if GE is flat? 648, collect the 39 cents. I've made 39 cents so far. I've made 6.4. Remember, I'm just focusing on 6% a month. 6.4, and I'm going to do it again and again and again. In fact, this is the desirable case because that way I can just collect the premiums, I love sideways moving stocks like GE, for instance. What if GE drops by May 21? I've got that profit buffer. It can drop all the way down to $6.09 and it won't affect me one bit. Here's another example. This is a real world example my program participants and I did. This is on Cisco Systems. A little bit more expensive. So what we did is instead of doing Cisco, we did the Cisco January 2022 $30 call, only paid $15.70, $15.71 when we include our commission. We got a $3.85 premium back, so that reduced our cost basis back to $11.87. We got exercised. We got to keep the difference between $45 strike price and $30 strike price, 15. We walked away with 26.3% ROI in just 19 days. So you can see how doing that back month leap has a lot of value. Again, I want to remind you, we're focusing on 6% because that'll double our portfolio. If you make more than 6%, that's great, but we always target 6%. And we can go through this, but I'm seeing that the clock is going by, so I just a quick reminder, doubling your money is where it is. And of course, there's that component about once we grow a $100,000 portfolio, we could basically live on it. Couple more returns, 21%, 12% when the stock went sideways, 17% when the stock went down. How can we drastically reduce our return on risk? So we've got that profit buffer, but what else can we do? Let's go to the next phase of our training here. Should we just sell half as much option premium? Should we sell out in time options? Should we collar the investment by marrying a protective option, or is what I'm talking about not even possible? What do you think? A, B, C, or D? If you said C, you're absolutely right. Pat yourself on the back. If not, that's okay. That's why we're learning. Couple more returns. All right. Remember this chart? Before I even go on to this chart, I want to show you an example of buying a protective option, because this is a trade that we've been doing since August. So you'll notice here we bought 600 shares of stock. We actually paid $34.73 for the stock. Then we collected our premium, and then we protected ourselves down to $34. So we bought ourselves a protective put. We went out 3 months in that protective put. The reason why we go out 3 to 6 months in that protective put is so that we don't get the theta decay and we don't get the volatility changes. So we bought this thing for $5.75. Time went by and the $1.76 expired worthless. And then guess what? We sold that option, that protective option. As soon as the premium expires worthless, we don't need it anymore. We sold that protective option back. And because we had purchased it and we timed the selling of it, we actually made a profit. So not only, I want you to get this, because some of you folks, you're used to protecting and hedging your position at a loss. What we have done is we've timed our trade so that we protect our position, but at the same time, we've created a companion trade that actually, once we don't need it anymore for protection, it creates a secondary source of income to the economics of the position. So not only did we make $1.76, but it looks like we also made $1.15 on rolling out the protective option. So we did it again the next month. We made $1.47 on the premium. We purchased our protection at $3 and a penny, sold it back for $3.62. We made $1.47 that month on the premium, 61 cents on selling it back. And we just do that month after month after month. In fact, I've got my Thinkorswim over. We love these boring stocks. This is PAAS. You can see it's been going sideways. I love stocks that go sideways because it just creates an ongoing income for me. I don't have to do anything. Let's see. Look at this. I've been doing what? 1, 2, 3 trades per month. 3 trades per month, and this thing is paying, we're already up to a total accumulation of 53% on the, right now, if I was to get out of this position, I'd make $20 on the $34 I invested. I mean, so that's kind of what this particular chart is representing. In fact, this is that stock. One other thing I want you to notice, look at the strike price I'm protecting it at, $34. So if it goes below $34, that protective put is going to start paying dollar for every dollar that there's a loss. In other words, the risk stops at $34 when the underlying hits $34. I want you to notice, look at what happens to the cost basis. As soon as I get past the first cycle, my cost basis is now below $34. In other words, think about that. If I'm insuring a position so that there's no risk below $34 and I'm only in the investment for 31, 30, 29, 25, what does that mean if I'm insuring for a position for more than it's worth? Think about that a second, because this is what we've got going on here. Here's that break-even line. This is the average time our premium selling investments last. Because a lot of people are saying, well, don't you always want to get exercised? Exercise is what happens if the underlying symbol goes above the range high. The range low is what happens if you get bailed out. Our positions last on average 5 months. By the time you're 5 months into the position, you don't even care if the underlying symbol goes against you, because the difference between the ROI of it getting exercised versus getting bailed out is like the difference between 50 and 60%. Does that make sense? 65% or 50% if the underlying goes against you. So you always ask my premium sellers, what had happened when the pandemic hit and all the market crashed out? And they'll tell you that they all walked away with big profits. Here's the other thing I want you to notice. Do you see this mark over here where the underlying goes? This is that mark that I told you about on that actual trade for PAAS. This is the mark where the position is now risk-free. Does that make sense? In other words, these positions only have to go just a couple of weeks before it doesn't matter if the underlying goes for you or against you, you're going to walk away with profit. So let me ask you again, just to make sure you understand, what do we have when our break-even price is less than our protective bailout price? Do we have a risk-free investment? Do we have a losing trade? Just too much complexity? A crack pipe dream? I got to give it to the folks who helped me with my slides. If your answer is you have a risk-free investment in just a few weeks after you place the initial position, you're absolutely right. So let's review the 3 steps. Actually, let me show you one more example before I even get to my review. I want to show you, because a lot of people say, prove it about that pandemic. So here's a trade that we opened on February 4th on Ericsson stock. I hope you can see this. Let me see if I can zoom in a little bit. Maybe that's a little bit better. So on Ericsson stock, we bought 1,100 shares at $8.10. With commissions, it was a late $8.11. A few days later, we sold our premium. We made 30 cents, and we bought that protective option. Our protective option cost us 15 cents. Time went by, March 10th, and that 30-cent expired worthless. Now, if many of you remember, it was the middle of March. In fact, let's pull up Ericsson on our chart here, and let's go back a little more than a year to when the pandemic was announced. So let me go here to a 2-year chart, daily, not weekly. And you'll see right here towards the March by, what's this date right here? Let's zoom into this area. All right, so around March 16th, we hit a bottom. So by March 10th, we knew all hell was breaking loose. But I had that protective put, right? The thing that I bought for 15 cents, the thing that was at the $8 strike price. I waited until the bottom had been found on March 18th. I got stopped out, by the way, of the stock, right? I got stopped out at $7.40. That was right here, $7.40. I had put a stop loss order. I got stopped out at $7.40, but I let the put continue to go. And the put, as you know, makes money as the stock goes down. I waited until March 18th. That was right here. We already started to go back up. And on March 18th, I sold that put, something I bought for 15 cents. The insurance worked, right? I sold it for $1.95. So when you all was said and done, even though the market had crashed and Ericsson had gone from $8 down to like $5, I walked away with 17.2%. So this strategy works whether the market goes up, down, or sideways because we protect it. We collar it. So this is a beautiful strategy to just, and again, how many trades did I place? I placed a trade on February 4th. I did 2 trades on February 20th. This trade happened automatically when the stock expired worthless. The stop loss happened automatically. So the actual activity I put over February 4th to March 18th was to literally do 3 or 4 trades. And I walked away with 17.2%. I'm not day trading here. Most of this stuff is happening either expiring worthless because the option comes to the end of its life or because a stop loss happens. I'm not doing anything. I'm off. You can ask the folks at TradeThirsty. They know that I like to spend my days over at the local circus school. I'm in my late 40s, almost 50, and I'm learning how to be a trapeze artist. That's what I do in the middle of my day. Right? I know a lot of folks like to be day traders, but a lot of folks have things that they're doing. They have day jobs or they have like activities that they want to do and they can't be in front. Well, this is a beautiful strategy for that, right? Okay, let me finish my presentation. I got to keep an eye on the time here, see if we can get folks caught up with the time. So here's what you're going to do. You're going to buy or short an underlying security, or you're going to buy a substitute option trading at parity. Then you're going to sell a near-term at-the-money option for its premium value, create an instant dividend and profit buffer, and then collar with a married option that is 3 to 6 months out in expiration to protect your investment. Here's the timing. So if you're going to do something like a covered call or a bull call diagonal debit spread, we'll look at a bottom. By the way, thanks Rajesh for that beautiful words. Bottom of the underlying symbol channel. So every time you hit a bottom, we'll go ahead and buy the stock, or we'll buy the back month call trading at parity. We'll put our stop loss order in place, and then we'll just wait for the reversal. That's when we'll sell our premium and buy our protection. That premium is going to expire. And by the way, you can do this with weekly options or monthly options. That near-term call will expire worthless. As soon as you're done hitting a bottom, you'll sell back your put protection, and then you'll repeat, repeat, and repeat. Do that same thing with a covered put. However, in the covered put, you start at the top. So we either short an underlying stock, or we buy our put option trading at parity. We put our stop loss order to the top. We call that our bailout order. We sell our near-term put option. We buy our call option as protection. So everything's just reversed. And that's great because depending on where the underlying symbol is in its channel, you can pick one of the 4 strategies that you want to do that comes up next. You can basically pick the strategy that's best timed for what's happening with the symbol. The near-term put option expires worthless, and you sell back the call option. Repeat, repeat, repeat. So let me just take the last, I have about 9 minutes left. How would you like to never miss one of these picks? Minimize the amount of time you spend away from any of your loved ones. And of course, this is the big one, have support whenever you need it. Timothy asked, speaking of stop losses, what percentage stop loss do you use? It's on a per symbol basis. We actually look over the time that the symbol has been channeling, and we select a bailout price in the beginning. We plan out our trade in the beginning based on a true bailout, meaning the symbol has never been there since it's been channeling. So great question. Thank you, Tempe. And thank you for not calling me names like Rajesh did. This is what it's all about. Saving time, creating clarity, and getting results. And when I'm talking about results, it's not just time freedom, it's actual cash results. Just letting your portfolio work. You basically are becoming your own fund manager, right? So would it be okay if I take a couple of moments to tell you a little bit about my materials, my training, and tools to see if they might be right for you? If it's okay. Cool, a lot of people are saying yes. Thank you. So let me just make sure this is this describes you, because otherwise this might not be the best service for you. Not yet. We're not going to drop my link yet. Who is this for? This is for someone who doesn't want to pay for multiple data subscriptions. They want everything they need in one place. They don't want to miss an opportunity. They want to spend more time doing other things. They don't want to do this alone. They want step-by-step instructions. In fact, what this is someone who wants to get consistent and reliable results. A lot of people are saying, now with these strategies, how much do I need to invest? Now realize this is not get rich quick or no money down biz op. We're talking about investing here. So you have to have investment dollars. An investor is someone who uses their money to make more money. You don't need seed money to invest. You do need some seed money to do investing. We've had people start as low as $800 in their account. But there is a sweet spot where the most premium selling investments are available to you without limit. And that starts with a portfolio sized at $4,000 or more. So I've seen people in my program start with as little as $800, but if you've got $4,000 in your trading account, this will hum for you. So Let me just, I'm going to bring over a browser just very quickly. I'm going to go ahead and very quickly log into our web portal. So people who have access to our program, they immediately get access to our web portal, which looks something like this with the webinars and then the different pieces of the puzzle, premium selling tutorials, the learning replays, the workshop replays, the screener. We even have a couple of beta screeners, covered call calculator, vertical spread finder, all this kind of good stuff. We've got video tutorials that take you through the whole process. And then what we like to do is have a learning webinar once a month where we actually, it's more of a lecture, and these are all archived, so you can go back and review these things. We've had them archived since the beginning of time. We just had one on March 23rd, and we're going to have one this Tuesday coming up. It's always the Tuesday after monthly option expiration. And then we have a weekly workshop. And this is kind of fun because this is where we actually have our folks bring their symbols to us, and we pick the best of the best, and we actually plan it out using we give everybody this cool planning worksheet. We also show them how to plan it out by hand, but this worksheet does all the maths, and then it creates the plans for you. It even will take your portfolio size, and it will tell you exactly how many shares, right? After a bottom is found, go long, 600 shares. This is the one that we just did this past Thursday. Make sure you pay lower than 951. Place your conditional bailout. After the top, it tells you exactly what to do for those 4 trading plans that we had defined. So it's a cool little spreadsheet. That's part of the program too. We give you the program. We even give you, when you look at the replay here, not just the replay, the transcript. I know a lot of people don't like to watch long videos, so we write it all out. And then we even give you the configuration that we filled out so that you can go ahead and follow along on the trade yourself, right? We fill in all the numbers so you can do it yourself. You don't even have to really, we like to learn while we earn here. So we got the video tutorials, we've got the monthly live classes and their replays, we've got the screeners. We give you screeners. I forgot to show you the screeners. Let me look at the clock. I don't want to go too far over. So for instance, I can jump right to the screeners that tell us exactly what we want to trade. These are screeners that I have my algorithms for. Let's see what this looks like. So these are some symbols that are worth taking a look at. And like I said, we also have some beta screeners. You can pull these up and see some other symbols. This is some of the different algorithms that I've been working on. These are underlying symbols that are worth planning out and being part of your trade. Let's see what else. Planning tools, weekly live workshops and their replays. The trade review. This is one of the things I really like. You click on support and you click on ask a trading question. And this is your way to get in touch with me directly. I love to look over your shoulders. You attach your trade plan, screenshots, whatever you want to do, and you have me look over it. Right? How much better is that than to have me actually look over your shoulder and tell you whether or not you're about to do it right or not? So trade review. So how much is that all worth to you? Let me also tell you this, and then we'll be done. Double your money back guarantee. So I want you to try my program for a full 6 months. And if you do everything I say and you're not making money by the end of the 6 months, not only will I give you the money that you paid on the program, but I will give you twice your investment. I've been having this guarantee since 2007. Double your money back guarantee. And in addition to that, guess what else I'm going to throw in? A session with one of our representatives to talk about where you are and where you want to be and the timeline and what you have to do to get there. My representatives are folks, my coaches are folks that have been there. They've done that. They know how to navigate and set a timeline with your investment portfolio so that you can make sure you've got good expectations. So a strategy session. So what is that all worth to you? I'm not going to go through this. Well, Charlene was pretty amazing. She sent me an email at 2:10 in the morning. She's somebody who got cancer while she was a teacher. By the way, I believe that teachers are the most underpaid underpaid profession in the US at least. She got cancer. She stayed in the classroom until they forced her out, and she thought she was going to pass away, and she was super peaceful about that. But then she recovered, which actually in these states, and I don't know about the rest, go ahead and put the link up now, folks. Yeah, the scoop is that she recovered, and in the states, sometimes that's no good because then she had all these medical bills, right? She had all these medical bills. She had no livable retirement coming along, so she found our program online. She had just a little bit of money to invest. The instant income calendar tool is very easy to use. All she does is read the daily table, find the stock she's interested in, follow the strategies set out for you. I use this along with other strategies to diversify my financial plan. I recently made 14% by just spending about 15 minutes reading about the company, following the chart, and then waiting for expiration. It was so easy. Okay, so the price of this 6-month program is $597, but the folks at TradeThirsty, this is a flat fee, 6 months of access to the program. You get everything, including my review. Send me a trade every day if you want, and I'll review one every day for you to tell you whether or not. That's what I do. There's no other charges. And because the folks at TradeThirsty are so awesome, I created a promo code just for today, which will drop the price by $100. So it's only going to be $497. So the link is in your chat. It's optioninvesting.org/TradeThirsty, optioninvesting.org/TradeThirsty. If you've got your mobile phone and you don't want to type that in or click on the link, you can scan this QR code. The promo code is 100DISC. 100, and it's all capital letters. So when you get to the order form, it's going to say $597. In fact, here's the order form right here. So it says $597, but there's this little place down here called promo code. Type in, and let's just make sure it works. Otherwise, I'll have egg on my face. Capital DISC, 100DISC, apply, and it should reduce the price like it did for me to $497. We take PayPal or credit card. What I'd like you to do is not pass go, not collect $200. And just know that I think you deserve this. I really do. I think you deserve it, and I think that your loved ones deserve this too. Folks, I'm at the end of my time. I appreciate it. Thanks for all of you for participating. I especially appreciate you, Rajesh, for keeping me humble. Feel free to join my program, and the link is right there in the chat center. Sherry, thank you for having me here today.